You open the mail and there it is, a letter from the IRS with CP2000 printed at the top. It says you owe more money, sometimes a lot more, and your stomach drops. Now take a breath. A CP2000 is not an audit, it's not a bill, and it's not the IRS accusing you of cheating. Here's what it actually is, and here's exactly what to do about it. A CP2000 comes from a computer, not an agent. The IRS matches what you put on your return against what other people reported about you. Your W-2s, your 1099s, your brokerage statements, all of it gets filed with the IRS. When the numbers don't add up, the computer flags it and spits out a proposed change. That's the key word, proposed. The IRS is telling you what it thinks the number should be. It's not the final word. And here's the part that most people miss. The IRS is often wrong, or at least incomplete. The classic example is stock sales. Your brokerage reports that you sold $10,000 of stock. The IRS computer sees $10,000 of income. What it doesn't see is that you paid $9,000 for that stock in the first place, and your real gain was just $1,000. But the CP2000 wants to tax you on the whole $10,000. Multiply that across a few transactions, and the proposed balance looks terrifying, and it's also usually inflated. So what do? First, don't ignore it. That's the one move that turns a manageable problem into a real one. A CP2000 gives you a deadline, usually 30 days, to respond. There's a response form right in the notice. You can agree, you can partially agree, or you can disagree. If they're right, you sign, you arrange to pay, and you move on. If they're wrong, and they often are, you respond in writing and you attach the proof, the cost basis of that stock, the 1099 that got reported twice, the income that was already on your return just under a different line. You make the IRS show its work and you show yours. What happens if you do nothing? Well, the proposed change becomes a real assessment. The CP2000 turns into a notice of deficiency, the dreaded 90-day letter, and after that, the IRS can assess the tax and start collecting. Liens, levies, the whole machine, all because of a piece of mail that sat on the counter. Now here's the truth. After 32 years of doing this, most CP2000 notices aren't the disaster they feel like on day one. A lot of them get reduced. Some get wiped out completely, but only if you respond and respond correctly before the clock runs out. Knowledge is protection. You now know what this notice is, what it's not, and what it's asking of you. If you have a CP2000 sitting in front of you and the numbers don't make sense, don't guess and don't panic. Let's talk. I'll tell you straight whether you owe it, and if you don't, how to prove it. Thanks for watching.